Investing can seem intimidating, but sometimes the most talked about opportunities are right on your high street, like Legal and General. This British financial giant is making headlines for its potential to deliver steady, passive income through generous dividends. But is it really a golden opportunity? Or are there hidden risks? Today, we'll break down what Legal and General does, why its shares are so popular, and what you need to watch out for. Let's dive in. You've heard the name, and you've probably seen their iconic umbrella logo on buildings or in the news. But what does Legal and General actually do? Many people assume it's just another insurance company, but the reality is much bigger. It's far more than just an insurance company. It's a financial powerhouse with three main arms. Media, animated flowchart showing business divisions, financial analysts reviewing charts on screens in open plan office retirement solutions, retail insurance and investments, and global asset management. Each of these divisions plays a crucial role in the financial lives of millions. The retirement division manages pension promises for companies, taking on long-term financial commitments. This means they help businesses provide secure retirements for their employees, handling billions in pension assets, and ensuring people's futures are protected. The retail side offers life insurance, critical illness cover, and investment products to millions of customers. Whether it's helping families safeguard their loved ones or supporting individuals to grow their savings, Legal and General is there at every stage of life. And then there's LGIM, one of Europe's largest asset managers, running trillions in funds and shaping markets worldwide. They invest in everything from infrastructure to technology, influencing how economies grow and evolve. This broad reach makes Legal and General a key player in both the UK and global financial systems. Their decisions impact not just their clients, but entire industries and communities around the world. It's this scale and diversity that underpin its reputation, making Legal and General a trusted name in finance, insurance, and investment for nearly 2 centuries. So, what's been going on with Legal and General lately? Let's take a closer look at how the company's shares have been performing and what's driving the recent headlines. Over the past several months, Legal and General shares have experienced significant ups and downs, reflecting a period of heightened volatility in the broader market. The stock has been trading at what many analysts consider bargain levels, especially after a notable dip in 2024 that caught the attention of both retail and institutional investors. High interest rates, persistent inflation, and ongoing economic uncertainty have all weighed heavily on the share price, making investors more cautious. However, for some, these challenges have created a potential buying opportunity as they believe the company's long-term prospects remain strong. Adding to the mix, the new CEO, Antonio Simoes, recently stepped into the spotlight and unveiled a fresh strategy. His plan focuses on restructuring the business, expanding internationally, and, importantly, maintaining the company's commitment to growing its dividend, a key point for income-focused shareholders. The market's reaction so far? There's a sense of cautious optimism, with some investors encouraged by the new direction. But there's also skepticism, as questions remain about whether the strategy is bold enough to address all the company's challenges. As a result, investors are keeping a close eye on Legal and General's next moves, watching for signs that the company can actually deliver on its promises and turn strategy into results. For now, the share price remains caught in a tug-of-war between the company's solid fundamentals and the uncertainty of what lies ahead, making Legal & General a stock to watch in the coming months. The main attraction for many investors, it's Legal & General's impressive dividend, which has become a defining feature of the company's appeal. With dividend yields frequently hovering around 8% or even higher, Legal & General offers one of the most generous and consistent payouts available on the entire London Stock Exchange. This level of return is rare, especially among established blue-chip companies. For income-focused investors, this is a huge draw, far outpacing the returns from most traditional savings accounts, government bonds, or even the average yield of the FTSE 100. It's a compelling option for those looking to supplement their income, especially in retirement. The company has built a strong reputation for not just paying its dividend, but for steadily growing it over time, rewarding loyal shareholders year after year. In fact, Legal & General has outlined clear plans for continued, steady dividend increases through at least 2027, giving investors confidence in the company's long-term vision and commitment to shareholder returns. This reliability is deeply rooted in its long-term pension contracts and a robust, cash-generating business model that provides a stable foundation for these payouts, even during uncertain economic times. For those seeking passive income, Legal & General stands out as a top contender, offering a blend of stability, growth, and attractive returns that few other companies can match. But it's important to remember, high yields can sometimes signal higher risks, and the sustainability of these payouts is crucial. Market conditions and company performance can always change. That's why savvy investors keep a close eye on Legal & General's financial health and its ability to maintain these impressive dividends, ensuring their income stream remains secure for the future. Beyond dividends, Legal & General's appeal lies in its stability. Founded in 1836, it survived wars, recessions, and market upheavals, building a brand people trust. Its income streams are long-term and predictable, especially from pension risk transfers. The company's diversification across retirement, asset management, and insurance helps cushion it from shocks in any one area. Analysts often see the shares as undervalued, trading at a discount to peers. For value investors, this combination of resilience and potential upside is compelling. Still, stability doesn't mean immunity to risk. The market may be slow to recognize value, but patient investors could be rewarded. No investment is risk-free, and Legal & General faces real challenges. Its fortunes are tied to the UK economy and financial markets, so a recession or market downturn could hit profits and asset values. Interest rate swings and market volatility can impact its massive investment portfolio, especially bonds. Regulatory demands require strong capital buffers, and fierce competition pressures margins. The new CEO's strategy brings execution risk. Restructuring a giant like this isn't easy. If the new plan falters or the economy worsens, dividends and share price could suffer. Investors need to weigh these risks against the company's strengths. Staying informed is crucial. The arrival of Antonio Simoes as CEO marks a new era for Legal & General. His strategy: streamline the business, focus on core strengths, and expand internationally, especially in the US and Europe. Some investors hoped for bolder moves, like selling non-core assets. But the approach is more evolution than revolution. The plan targets steady earnings growth and continued dividend increases, but not explosive expansion. The big question: can this steady approach deliver real results? The market is watching for proof that the new vision translates into growth and higher returns. For now, uncertainty lingers. So, is Legal & General a buy? Bulls point to the high dividend, strong cash flow, and undervalued shares, seeing a resilient income-generating powerhouse. They believe the new strategy is sensible and that international growth will unlock value. Bears worry about economic headwinds, market volatility, and whether the dividend is truly safe in a downturn. They're cautious about the company's exposure to the UK housing market and the lack of bold restructuring. Both sides agree. The company's future depends on successful execution and economic stability. The debate is far from settled. Ultimately, it's a classic case of risk versus reward. So, is Legal & General a passive income goldmine or a risky bet? If you want high income and can handle market ups and downs, it's a strong candidate. The dividend is attractive, the business is resilient, and the new management is committed to growth. But if you're risk-averse or seeking rapid capital gains, you may want to wait for more clarity. As always, do your own research and consider your personal goals before investing. We've covered the strengths, risks, and unanswered questions. Now the choice is yours. Stay informed and invest wisely.